Hi everybody, my name is Rob Paulson and this is my project predicting FX rates using artificial intelligence. Um, we're going to talk a little bit about the Forex market. That's the foreign exchange market. It's really just a fancy way to talk about trading currencies. And we talk about FX rates. That's just a fancy way of saying the exchange rate. The idea behind all of this is that over time, and here's a chart sort of demonstrating, you can see this is a graph of the euro dollar pair. Now, over time, the value of 1 euro relative to $1 fluctuates. If you could predict in advance what the value of the dollar or the euro is going to be, you could use that for financial gain. You could make a lot of money. And that's really what my project is all about. These are my objectives: to use artificial intelligence to create a profitable Forex trading agent. I would also like to carry a giant bag of money with me. I would like to buy a brand new house and paint it entirely green. And finally, I could use a new car. Now, I implemented several different Forex trading agents, and to measure objectively how good or bad a particular agent was, I created a market simulation using historical data for the previous 11 years, so from 2002 to 2012. Each year, each agent begins with 50,000 US dollars and is free to trade in whatever way it sees fit. At the end of the year, the more money the agent has, the more successful we're going to say it was. So we're just trying to maximize profitability here. One of the techniques I looked at is something called a Markov chain. It's very similar, at least I think, conceptually, to the Bayesian networks we talked about in class. Now, the nodes here are going to represent states, not variables. The edges are going to represent the transitions between states, and each edge is going to have a probability associated with it. So in this example, if today is sunny, there is an 80% chance that tomorrow will be sunny and a 20% chance that it will be raining. Now, to apply the Markov chain to the Forex market, what I did was I defined three states. The dollar could go up, the dollar could go down, or the dollar could stay the same. And I used the 6-month history to populate the probabilities. So I looked at what actually occurred in the last 6 months in that particular state to predict how likely the next state would be. So what tomorrow's value would be. It actually worked surprisingly well. It outperformed random selection in 10 of the last 11 years, so 90% of the time. Another thing I looked at was using a neural network to try and predict the future prices. Just briefly, a neural network, it's loosely modeled after the brain. We have nodes or neurons that take inputs and generate outputs. There's weights between the nodes that are adjusted based on learning or training data, and in my case I used the previous 6 months once again to populate the weights. So here you can see the inputs I chose were the change in the dollar, the change in the Dow Jones Industrial Average, and the change in the price of gold. And the hopes were that the output would accurately reflect the change in the dollar. And this also worked reasonably well. It outperformed random selection in 9 of the last 11 years, so 81% of the time. And so what I learned is that artificial intelligence can be effective in making profitable Forex trades. I've summarized the average annual return. So the Markov chain averaged 11.24%, the neural networks 5.19%, and just as the baseline, my random agent did 1.76%. The Markov chains I found to be very useful. Neural networks also very useful, but a bit tricky. Finally, I just want to thank the original authors for their work, the EOD Data Company for providing the market data I used, the NCOG AI framework that I use for implementing the neural network, the professor and Zach for all their work this semester, and all of you for watching this presentation. Thank you.